What is going on, everybody? It is your boy Stas here. Welcome back to another video. So we have to break down what I'm buying right now in the midst of this bear market, and we also have to talk about kind of what I'm doing on a more personal level, what I have coming up here personally over the next couple of months, well, really 12 months, and my plans here for the next 18 to 24 months. So if you all find value, hit the like button, feel free to subscribe, and of course, take a sip of your coffee. Cheers, guys. I appreciate you all for being here on this beautiful Saturday. I was about to say Sunday. It's Saturday morning, afternoon. Well, it's not morning. It's noon right now on the East Coast. But either way, we're going to dive into it, and we're going to start off this video with what I'm buying. We're going to talk some index funds, ETFs. We're going to talk some individual stocks, and then later in the video, we're going to get a little bit more personal. What I have coming up here over the next year, my plans for the next, 18, 24 months and beyond. So let's just get into it. Right off the bat, guys, we're going to start with the basics here. What I've been buying, I don't want to say the most of, or, maybe the most consistently, that's a good way to put it, is VOO, the Vanguard 500 Index Fund. And I've talked about it. I prefer this over SPY for the long term. We'll talk about that here in a second. But right now, net assets on VOO are $686 billion. The dividend yield is 1.8%, which is nice, not bad. And if you own this, I'm sure you're reinvesting that because this is it's meant for a long-term investment. Or, I mean, you could trade it if you want. Sure, you can day trade VOO. But the way I'm looking at it here, for me personally, I'm buying this and I'm holding it. And all the dividends I get, I reinvest it. And that's what a lot of people do overall with something like a VOO. And the expense ratio right here, you guys see that, is 0.03%. That means for every $10,000 invested, for every $10,000, you got to pay $3 a year, right? Which is very small, very, very small. And if we're comparing it to SPY, let's pull this up. SPY, if you're trading, I mean, you're going to be looking at SPY, obviously, over VOO. But for the long term, this is triple the expense ratio, 0.09%. So for me, I'm looking at that and I'm like, I'd much rather put my money in VOO because at the end of the day, it tracks the same thing, the S&P 500. So why pay triple the expense ratio with SPY when I could just buy VOO? So that's what I've been buying the most, consistently here, VOO throughout the entire bear market, pretty much all the way down. And I bought more this past week, guys. I've been buying this thing all the way down, right? Another one that I've been buying, which some people might not agree with, which is completely cool, completely okay. I've been buying VXUS, which is the Vanguard Total International Stock Index Fund. This right here includes not only, it doesn't include U.S. companies. I was about to say it includes not only U.S. companies, but it also includes international. That's my mistake. It does not include U.S. companies. I was about to confuse that. So it does not. VXUS is the total international stock market fund that excludes U.S. companies, right? And I buy this and I keep it at, I think, like 5 to 7, 8% of my long-term portfolio just to have some exposure outside of the U.S. And I know you guys are going to be like, well, Stas, a lot of the U.S. companies, they have business abroad, which you're right. But I want even more exposure. Guys. So I buy VXUS every so often, not as often as VOO because I don't want it to become too big of a position. Again, I want to keep it at like 5, 7, 8%. And this pays a big, big yield. Again, VOO is at 1.8%. Well, look at VXUS. It is double that, 4.2%. And I'm reinvesting, those dividends into VXUS. Another thing that I've been buying here, which is a REIT, it is Realty Income, ticker symbol O. And this is one that I have in my retirement account. I like with dividend payers, I've talked about this before. I don't really like to keep those in taxable accounts. I like to keep them in like a Roth IRA, for example, where you don't have to pay taxes on the dividends. You don't have to pay taxes on the capital gains. And we've talked about it before, dividends, the company has to pay taxes on that money, on those earnings, and then they pay them out to you, the dividend, and then you have to pay taxes again. So it's kind of tax inefficient. But again, if you're in let's say a Roth IRA, for example, which is my favorite retirement vehicle, especially if you're a younger person, I mean, come on, a Roth IRA, you're not paying taxes, you're going to be doing great. And if you're reinvesting, I like it. And this pays about a 5% yield. And this is not a huge position in my portfolio, but I still keep it in there, and I reinvest all the dividends. And I've been buying a little bit here because if you guys take a look, this thing is down pretty big in just the past couple of months. It was at $75 in the beginning of August. Now it's in the mid 50s. So it's come down. I'm buying the dip just a little bit, nibbling, as it comes down. And again, I'm reinvesting those dividends. And for individual stocks here, let's not take too much time on this because I've talked about these stocks a ton on the channel. You guys are probably sick of me talking about these. But Alphabet, this is one that I own. It's my biggest individual stock, and I've been continuously buying it. The PE ratio right now is an 18. Market cap's a 1.3. I think this company is a $2 trillion market cap. It's at 1.3. I think it's pretty, I'm not going to say it's a bargain basement value. If it got to like 80, 85, it would be, in my opinion. But here, where it is now, it's for sure at fair value, if not undervalued, depending on the way you're looking at it. But to really get a margin of safety on Google, $80, $85, that's where I'd be going heavy. And if it does get there, it's going to be a great buy in my opinion. Even here, it's a great buy. Again, I've been buying this thing for a while at this point. So yeah, Google, Alphabet is looking pretty good. Here Yahoo Finance says they're near fair value, which I agree with that for sure. Nvidia is another one that I've been buying, which I think Yahoo has them at overvalued probably. Yep, overvalued. But I bought a little bit of Nvidia, nibbled about 2 weeks ago at $121 a share. And I'm still holding on, obviously, because it's a long-term investment. And if it comes down even more, a couple, 10, 20 more bucks, $30, I'll be buying even more Nvidia. Another index, it's an ETF, is VOT. This is the Vanguard Mid-Cap Growth. I've been buying this as well. This is one that's kind of in my trio of ETFs that I just buy and dollar cost average into, which we talked about the first two, VOO, VXUS. VOT is another one. This is mid-cap growth. Net assets, $17 billion. They pay a little yield, 0.8%, nothing crazy. But overall, this includes a lot of U.S. companies that are, mid-cap, that I don't really have much exposure to because, honestly, with individual stocks, I don't really buy many mid-caps at all. I'm more large cap. And with the VOO, it's the 500 largest publicly traded U.S. companies. Technically, there's more than 500, but we're not going to get into that in this video. That's more large cap. So this gives me mid cap, and I've also been buying Disney. I actually haven't bought Disney in a couple weeks, probably like 2 months, it feels like. I don't know. I forget exactly when, but this is one that I've been nibbling a little bit here in the low hundreds. I think I bought some in the 90s when it was down there, and if it gets down to 90, 95 again, under 90, I will be buying more Disney, because if you guys take a look on the 5-year chart, Disney's flat. I mean, this thing is at levels that it hasn't been at in multiple years. So that's kind of what I've been buying on the stock market level here in this bear market. And you guys probably have heard me talk about a lot of these before, but just to put them all in a video so you guys get them. And there's been a lot of other stocks that I've been nibbling at a little bit, trading here and there, but I'd say for right now, these are the core ones. And I'm also saving extra cash. I'm not just going all in on stocks in this bear market. Yes, I'm averaging down. I'm investing, of course. I mean, during a bear market, that's when you're really going to accumulate the shares that will propel you in the next bull market, right? That'll propel your wealth, right? That's the idea of doing this. Over time at least. It's not guaranteed in the next year, but the next 10 years, 15 years, 20, it's pretty dang guaranteed, guys. Well, depending on what you buy. I'm not a financial advisor. I don't know your situation, but if you buy the S&P 500, it is pretty dang guaranteed. But that's not all I'm doing. I'm actually getting married in about a year from now, guys. So we already have cash set aside for that, a decent amount of cash. But guess what? Weddings are freaking expensive, especially here in New Jersey. They're going to be running $30,000, $35,000, $40,000, $45,000, depending on where you're looking. So again, we have cash set aside, not all that money, thankfully, and we're blessed for, my parents are giving us a little money, her parents a little bit, right? But not 40,000. So guess what? We have to put more money to it. And I'm going to be saving more money throughout these next, couple of months. And we're good. I mean, we have, I think, like 15K set aside. We're doing dandy. I mean, we're going to get that to 2025, and then we'll get some help again. We're blessed for that. And we're going to be dandy. But that is a big thing this year. We're getting married in a year. That's going to be big. And guess what? I also, and I've been talking about this on the channel, I also have separate money aside, and I'm not even, scared to take money out of my brokerage for this. I am looking for real estate in the next 18, 24 months, maybe 36 months. Hopefully we have something by then. But I'm actually looking for real estate. That's kind of what I'm looking to get into here. Rental property, duplex, even a primary home, right? Well, primary home for sure. But eventually I'm looking to get into some rental properties. Well, I don't want to get too far ahead of myself and be like, I'm going to have 10 rental properties next year. But slowly I want to get into it, right? And I've been talking about that on the channel a ton. Maybe not a ton, but I've mentioned it before on the channel that's a goal for the next 18, 24 months. So I'm not just buying stocks, guys, right? Not just buying stocks. I'm buying I'm buying ETF stocks, whatever, but I'm also saving cash for the wedding. Again, the wedding, oh my God. Getting into this, I did not think, I had an idea it was going to be expensive, of course. I mean, weddings are expensive, especially on the East Coast. If I lived in Utah or something, or I don't know, in the Midwest, wedding would be 15,000, 20. We'd be completely covered right now, right? But in the next couple of months, we got to get the rest of that cash. And it's all part of the plan, right? It's all part of the plan. You got to budget it out, and this is what's going on here in the household, guys. We're getting ready for that wedding. It's going to be a big year, 2 years, 3 years for me. So, I don't know. I'm kind of rambling and getting off on a tangent here, but that's pretty much it. East Coast weddings, $40,000, guys. So even more than that. I mean, we're not doing anything crazy. It's not going to be like, the Great Gatsby or anything like that. I mean, it's wild, guys. It's wild. 30,000, 40,000. So that's kind of what's going on over here. That's what I'm buying. That's kind of what's going on personally. The wedding's coming up. Got to get some cash for that. We're going to be saving for that, stacking up, and hopefully. We get some sort of real estate property in the next 18, 24 months, maybe even before that. Maybe even before that. Who knows? So with that being said, guys, I'm going to wrap the video up. If you enjoyed it, hit that like button, subscribe, get your 15 stocks for Moomoo with at least a $100 deposit. Each of those could be up to $2,000, and you could also get 12 stocks from Webull with any amount deposited. Link down below. And with that being said, cheers. I will catch you in the next video, guys. Peace out.